Hi guys, welcome to the Rule of Seven trading. I just thought I'd do a quick video. I've had a lot of DMs saying kind of which order block do you enter from. So the market doesn't always respond from every order block. It can do. Sometimes it wicks a little bit and then it takes that wick out and it drops to the next order block, or it keeps going to the extreme order block. So basically, you could do with kind of as soon as it approaches an order block, say on the hourly, you want to kind of drop down to the 15-minute and wait for a change of trend, so you can get in there kind of first, but obviously don't FOMO in. So I mean, the markets are fractal anyway, so you'll have the same kind of patterns on the hourly, the 5-minute, the 1 minute, the daily, the weekly. You'll have all the similar patterns anyway. So let's say you've had an impulse. Forget the time frame. Let's say you've had a nice strong impulse there, and we're going all the way up there, and then you can see it's starting to pull back a bit. So we'll stop it there a second. So say this is the stage you're at now. You kind of, this is the time you're at now, and you've got a couple of areas marked out. So you've got this POI and this one marked out. Now, ideally, you want to go into the premium. Sorry, not the premium, the discount. A lot of people call it the premium, hence why I'm muddling up. But say this is the start of the impulse. So this one may hold a little bit. It's touching discount prices, but we've got imbalance here. So you kind of want to wait for, you want to let it touch. Sometimes it will touch the edge, and then it'll fly up, and obviously everyone starts to buy in, and then it gets took out. So what happens a lot is a lot of people buy in here, myself included. I've done it in the past, and I'm sure I'll do it again. But you get FOMO'd in because it's near this 50% area. It's near the discount prices. So you jump in, but then it doesn't actually break this high. It doesn't break the supply that pushed it into the area. So it'll go close, it'll tap into the supply box, but it won't break it. And then what you'll see is we'll start to tap in to the imbalance area there. And then all from the first block to the second block to the third, the fourth, fifth, all these blocks, depending however kind of many there is, people will be trying to be the first person in, and that's one of my unfortunate traits, that I'm always trying to be the first man in. But I'm kind of learning to be more patient with it, and obviously you guys should as well. Just wait for the best entries. So we've kind of taken all the imbalance out now, and this is one of the more extreme blocks, and obviously this is in discount prices. So we tap the edge of it. Sometimes it can fly off without you, but you've not lost out because you've not entered, so you've not lost any money. So, but what I've seen a lot of the time is it'll bounce off a little bit, let the buyers have a minute, make them think they're in profit, and then we'll tap a bit deeper, we'll sweep them. Hence why on my drawings you see sometimes there's like a sweep. So we'll sweep them. We might even, I've seen it where they get swept again, and then you wanna wait till it takes out the current supply. As soon as it takes out that supply, you can either wait for it to tap demand and then break again, and then you can enter about there, or you can enter. So soon as that supply gets broken, and especially in a discount order block, and obviously you should have kind of like time frames that you drop down to. You should always have an entry time frame. So entry time frame for me is the 10-minute and the 1 minute. A lot of people's is the 15-minute, which is totally fine, and a lot of people do the 1 minute. But yeah, so you want to drop down. So say that's the 15-minute supply area, that gets broke, and then it respects the demand area that actually broke the supply. So some people do enter there. depending on higher time frame, I would do very similar. So sometimes you enter, which is a risk entry. It's called a risk entry because you're not waiting for even more kind of confirmation. Or so you can have an entry there, which obviously sometimes it's just taking liquidity and then it will shoot down. Sometimes this, if I can pick it up, sometimes that will carry on shooting down. But most of the time, once the trend change, so that's the supply that took the sweep, the final sweep. Once the trend change has happened, most of the time it will react to an area of demand and then it will start breaking higher highs and higher lows. So the other confirmation entry is once this gets broken, you can whack an entry on there, and then you can obviously aim. You can have a nice small stop loss, only a few pips, and then you can aim technically for the high, hence the 28R, or even if you cover the bottom one, still a 12R. So yeah, so this then becomes the chock, the change of character. This then is the flip, because that flipped the actual trend around, and then you enter on the flip and you get in. So yeah, so quick recap. Obviously, once your impulse has happened, mark your demand areas or your supply areas. Obviously, in a sell situation, this will be reversed. You'll have your impulse down, and then you'll leave a load of supply areas. So when it's coming to hit your demand or supply area, drop down to your kind of entry time frame, wait for your trend change, and then start looking for entries. So hopefully that has been useful for you guys. If you can drop me a like, subscribe, or any comments, I'd greatly appreciate it, and give me a follow on the Rule of 7 on Instagram, and I'll keep posting for you all. I'll see you in the next one.